Imagine this. The asset once dismissed as wildly unpredictable is now steadier than one of the hottest tech stocks on the market. Bitcoin, often called digital gold, is shedding its volatile reputation and stepping up as a mature store of value. Welcome to the generational wealth community, your pathway from knowledge to legacy. We don't chase hype. We decode the market. Today we're diving deep into why Bitcoin is becoming less volatile than stocks like Nvidia, its evolving role as a reliable store of value, and how it stacks up against traditional assets like gold in this institutional era. If you've been on the fence about Bitcoin's place in your portfolio, this breakdown will arm you with the facts to make informed decisions. Let's start with the volatility narrative. For years, critics pointed to Bitcoin's price swings as a reason to stay away. But the data tells a different story in 2026. According to recent analyses, Bitcoin's annualized volatility in 2025 dropped to 46%. That makes it less volatile than Nvidia's 79% and even Tesla's 72%. That's a game changer. In 2025, Bitcoin's price ranged about 68%, from a low near $75,000 to a high around $126,000. Meanwhile, Nvidia saw a massive 120% swing. Fast forward to March 2026, and Bitcoin is trading around $70,000 with its 30-day volatility gauge showing signs of stability amid broader market tensions. At the same time, Nvidia's 30-day historical volatility sits around 36%, as its stock hovers near $180. So what's driving this shift? The answer is market maturation. Bitcoin's market structure has evolved, and institutional adoption is the key reason. Spot Bitcoin ETFs like BlackRock's IBIT have absorbed billions in inflows, broadening the investor base beyond retail traders. Now the buyers include corporations, funds, and endowments. Consider MicroStrategy. The company has accumulated over 700,000 Bitcoin at an average cost of $66,000 per coin, treating Bitcoin as a long-term treasury asset. This type of stable capital reduces leverage in the market and dampens the extreme price swings seen in earlier crypto cycles. Bitwise, a leading crypto asset manager, predicts Bitcoin will remain less volatile than Nvidia through 2026, thanks to this ongoing de-risking trend and regulatory clarity, such as the Clarity Act. Now let's talk about Bitcoin's evolving role as a store of value. In a world facing rising debt levels, inflation pressure, and geopolitical uncertainty, assets that preserve wealth are increasingly valuable. Bitcoin has a fixed supply of 21 million coins, and as of March 9, 2026, about 20 million coins have already been mined. That scarcity creates a powerful supply constraint, much like gold. But Bitcoin has advantages gold doesn't. Gold is currently trading around $5,000 per ounce. Bitcoin, on the other hand, is portable, divisible, and secured by a decentralized network resistant to censorship. Institutions are taking notice. For example, Harvard's endowment increased its Bitcoin ETF holdings to more than $400 million last year, signaling a hedge against fiat risk. Grayscale's 2026 outlook highlights Bitcoin as an alternative monetary asset, with macro demand driving fresh capital inflows. The Bitcoin versus gold debate is heating up. Gold recently surged to record highs around $5,200 per ounce, partly driven by geopolitical tensions such as Iran-Israel conflicts. Meanwhile, Bitcoin has consolidated within the $65,000 to $70,000 range. But the long-term upside is where Bitcoin stands out. JP Morgan notes that Bitcoin ETFs are currently outpacing gold ETFs in inflows during uncertain market periods. Institutions are reallocating capital because of Bitcoin's liquidity, global accessibility, and borderless transferability. If Bitcoin were to capture just 10% of gold's $29 trillion market capitalization, its price could exceed $130,000. This doesn't mean Bitcoin replaces gold. Instead, the two assets may complement each other. Portfolios that include small allocations to both have historically shown better risk-adjusted returns. Gold offers stability. Bitcoin offers growth potential. Together, they can provide balance. In 2026, Bitcoin's lower volatility compared to stocks like Nvidia isn't just a statistic. It represents something bigger. Bitcoin is transitioning from a speculative asset to an institutional financial staple. As regulatory frameworks solidify and AI technologies begin integrating with blockchain infrastructure, this trend could accelerate. For generational wealth builders, that means viewing Bitcoin not as a gamble, but as a strategic asset for diversification and preservation. Subscribe for daily recaps. Drop a comment with your biggest takeaway. And turn on notifications. We publish a crypto news briefing every morning and a deep dive every afternoon. Let us know in the comments what subjects you want us to cover next. Quick disclaimer: I'm not a licensed financial advisor. This content is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose, and always do your own research.